Thank you everyone for joining. I'm delighted to run this first series of webinar on the topic of high growth opportunities in Europe. I'm Arnaud Bossy. Let me introduce myself briefly before we go around the table and before we deep dive into our growth opportunities. I am the head of the European advisory team at Frost Sullivan. I am also in charge of our global team that does strategy and investment advisory. And at the juncture of both, I am passionate about growth opportunity, investment opportunity in Europe, hence this webinar series that we are starting today. We will be touching up on a few mega trends impacting Europe and resulting opportunities, ranging from the aging population in Europe and the resulting opportunities around enhanced human and robotics. We'll talk about connectivity, with opportunities around connected cities and mobility. We'll talk as well about back to basic workplace evolution, future of workplace, future of workforce, and resulting opportunity in the facilities management space. So enough from me. Let's go around the table and meet today's speakers, starting with Bijoy Daniel.
Thank you, Arno. Hi, everyone. I'm Dr. Bijoy Daniel. I'm a part of the healthcare and life sciences team. I'll be focusing on the MedTech industry in regard to today's wonderful topic. Back to you, Arno.
Thank you, Bijoy. Let's go to Hikmet Kakmak.
Yeah, thanks, Arno, and good afternoon, everybody, and thanks for joining us today. So my name is Hikmet Çakmak. I'm Director of Consulting at the Mobility team of Frost & Sullivan. So I'm specialized in advising companies in their growth and investment strategies across, mobility and the different adjacent industries. Today, I will be touching upon the topic of the autonomous cities and the smart infrastructure and evolution of it from smart city concept. So yeah, looking forward to today's session and receiving your questions as well. Thank you.
Thank you, Hikmet. And still on this topic, thank you very much for joining. Daniel Majewski from ZDev Group. Thank you, Daniel, for joining as an external speaker.
Thank you very much for having me. My name is Daniel Majewski. I'm in the company ZDev. I'm leading here the bus solution, so everything which goes into public mobility, which we'll touch later on a bit more. I'm in charge of, and in total 7 years. Before that, I have been in several other industries, and it's a big pleasure to be part of this session today. Looking forward.
Thank you, Daniel. Last but not least, John Raspin.
Thanks, Arno, and hi everyone. Thanks for joining the discussion today. John Raspin here. I'm a partner at Frost & Sullivan and the global head of our growth opportunity analytics business. I also play a role as a lead analyst in our facility management coverage and practice area. And yeah, very much looking forward to the discussion today on all these exciting topics.
Thank you, John. Well, without further ado, let's go to talk about our growth opportunities, starting with you, Bijoy. Let's talk about aging population and what it means.
Yeah, so let's basically explore the critical pain points before we talk in detail about the growth opportunities. So just setting the stage, understanding the critical key points facing hospitals and the healthcare systems across Europe, along with key priorities that leaders are pursuing to address them. European healthcare operates under intense structural pressure, and aging population drives higher demands for complex care, while persistent workforce shortages, post-pandemic backlogs, inflation, and tight public budgets strain resources. Many hospitals, predominantly public or non-profit, report ongoing financial crisis or deficits. In Germany, for example, the 3/4 of hospitals ended 2024 in deficit, with nearly 89% of public facilities facing serious financial distress and additional burdens of around 1.8 billion euros projected for 2026. And this comes from statutory health insurance saving measures. Similar pressures appears across the continent, while procurement often remains heavily price-driven rather than outcome-oriented. So let's begin with what these 5 or 6 belting points are. Let's begin with generating value for hospital. The core pain point here is financial unsustainability amidst rising fixed costs and stagnant productivity. We see workforce shortages inflate overtime and temporary staffing expenses, while low value care consumes resources without delivering proportional benefits. Healthcare also contributes significantly to the environmental impact, accounting for a very small percentage of global greenhouse gas emissions as well. But this adds to indirect pressure through uh, sustainability expectations. So the key priority in response to all these is that this is the shift towards value-based procurement and value-based healthcare. Instead of awarding contracts solely on the lowest price, systems are now emphasizing outcomes across entire patient pathway from prevention to end of life. In the United Kingdom, we see this with the new NHS guidance requiring at least 60% weighting on value criteria, including 10% of social value. So real world examples also illustrate this kind of impact. You can see that with an example in Belgium, which is the CSC Laye, where orthopedic procurement now tracks patient reported outcomes and also alongside clinical matrices, enabling performance-based adjustments. We see similar things in hospitals like the Clinic Barcelona's project for aortic stenosis mapped at the full patient journey, where weighted tenders around 96% of value and achieved fewer complications, shorter hospitals and ICU stays. Looking at delivery digital care, this fragmented infrastructure remains a major obstacle, and digital maturity varies widely, meaning between Nordic countries and the UK lead, while Germany and parts of Southern and Eastern Europe lag in electronic medical record adoption and true interoperability. The European health data space, which entered into force in 2025, mandates cross border data sharing and electronic health record interoperability, yet, implementation brings compliance cost. Leaders are trying to invest in remote monitoring, virtual wards, and hospital at home programs. The UK, for instance, targets around 50,000 patients per month on virtual wards, AI application for risk stratification, predictive analytics, etc. So, closely related is how we're talking about enhancing surgical efficiency. Now, a persistent elective care backlog continues to challenge operating theaters throughout. Uh, Post COVID waiting lists slightly remain elevated across OECD countries, with median waits for procedures like hip and knee replacements or cataract surgery, for that fact, which ranges from from 2 months in some nation to over even 6 months. So, what are hospitals doing about it? Hospitals are trying to prioritize smart, integrated operating platforms that incorporate digital surgery, augmented reality visualizations, robotics, and AI-driven scheduling and patient flow. Uh, so what we will see definitely is a main priority involving AI and automation to relieve administrative burdens and standardize care. Uh, Finally, the improving the patient journey is what all these talks about. It's basically addressing fragmentation, long waits, repeated information requests, and the poor transition from care settings, right? And then limited patient empowerment persists because there's a systemic collection of patient reported outcomes, and the experience measures faces logistical barriers. So if we had to look at the next slide, if you may, Arno. Thank you. So basically, Europe's profound demographic inversion projected is not merely a societal pressure point, but it's a definite growth engine for the medtech space. It's catalyzing double-digit CAGRs across remote monitoring, robot-assisted surgery, and intelligent assistive ecosystems. By seamlessly embedding Internet of Things enabled remote platforms, RPMs, AI augmented minimal invasive surgical robotics, and sensor driven assisted technologies within GDPR compliant data architects the industry in capturing and accelerating venture capital inflows as well as strategic M&A velocity. This is hence transforming regulatory rigor into a competitive mode that positions Europe as an epicenter of scalable, value based healthcare through 2030 and beyond. So let's look at remote patient monitoring now. It can be called the Internet of Things at the heart of proactive care. Let's talk about the numbers. The European RPM market is projected to be around 6.8 billion in 2025 as in USD, and it's projected to grow to as big as 11.2 billion by 2030, delivering a 10.3 CAGR, firmly a double-digit territory. Leading in this space, we find companies like Philips, who have the healthcare suite connected care platform, which integrates Internet of Things, enable wearables and cloud analytics for continuous monitoring of cardiac, respiratory, and post-acute patients. We also have a company called Biotronic, where its home monitoring system securely transmits data from implanted cardiac devices using cellular Internet of Things and a fully GDPR compliant design. Clinicians receive automated alerts on arrhythmias or device performances, and enabling intervention days or weeks earlier than traditional follow-ups. So these platforms don't just monitor; they help to predict and prevent, turning this regulated data protection requirement into a true competitive advantage. Let's even look at a space that's really growing and is very enthusiastically followed by the MedTech space. That's robotic assisted surgery, where we can term it as precision at scale. Robotic systems are expanding to access minimal invasive surgery procedures, and while addressing shortages and age comorbidities, you also see Europe becoming one of the homes for the most innovative pure player like CMR Surgical. They offer Versius, which is basically a platform that is modular, portable, and designed specifically for smaller operating rooms. They have made a mark with the CE marking for general surgery, gynec, urology, and as 2026 Jan even ventured into pediatric applications. We can also see another segment over here, which is the assist technologies. They basically for restoring independence back. So sensor-driven orthotics and prosthetics complete the triad that we are talking about. Germany's Autobox stands as one global benchmark. Its protocol, the Genium X4 microprocessor controlled knee joint, uses real-time sensors, AI gait algorithms, and hydraulic stance and swing control to deliver near natural walking, even on stairs and slopes as well. Autobox 2025 financial showed record double-digit growth driven by these bionic solutions, and is expanding its exoskeleton line for rehabilitation and industrial use. So where are we now with the real opportunities appearing in 2026? Arno, if you can help with the next slide, please.
Coming.
Thank you, Arno. Yeah. So first, digital health and AI integration stands out as an explosive growth area. The broader European digital market was valued at approximately around high double digit in billions in 2025. It's projected to be more than double over to something like around 220 million by 2030 with a very strong CAGR of 18%. Now, this AI-enabled solutions, they think diagnostic imaging, predictive analysis, remote monitoring, and personalized medicine, and are capturing a huge share of investment. In early 2026, we have seen AI ventures dominate the health tech funding, and Europe is seeing strong rebounds in digital health deals. Wearables and remote patient monitoring devices also booming, especially for chronic disease management and elderly care. The European wearable device market, which we've seen, has grown dramatically from around 11 billion and as early, and it's predicted to grow much higher by 2030. Uh, there's there's a lot of regulatory tailwinds at creating momentum. The EU's proposal is to simplify the medical device regulation, the MDR, and the in vitro diagnostic regulation, the IVDR, along with European life sciences strategy launched in 2025. And initiatives like the European health data space aim to reduce bottlenecks, speed of approval, cut costs. This is particularly promising for software and AI-based devices. Additionally, there's also a rise in uh, investor optimism, where deal volumes are picking up. Strategic acquisitions are focusing on high growth areas like cardiovascular, neurostimulation, and orthopedics. And Europe is positioning itself to close the innovation gap with the US uh, through better funding and talent pipeline. So, in summary, if you were to just bring this out in a smaller statement, while Europe's medtech market is mature and steady, the biggest opportunity that we believe is lies in 2026 is at the intersection of traditional devices with digital transformation, where you see AI, digital therapeutics, wearables, data-driven solutions, all supported by improving policies and demographic. For innovators, investors, and companies, this we believe is a pivotal time to scale solutions that make healthcare more efficient, accessible, and patient-centric. Open to any questions to the team.
Thank you, Bijoy. Maybe let me have a current question, and we can see if we have other questions for you. So that's very interesting. Thank you very much for this landscape. So in the area that you put forward, where do you think is the main, I would say, entry point for investment? Is it more in the equipment, the final equipment? Is it more in the material, in the components, or more in the AI technology software that goes behind it? If different, or if made by a different company, let's say.
That's a very interesting question. And to answer that, I'll outline a targeted entry point across the three focuses that you mentioned, basically in terms of equipment, OEMs, components, and materials. So let's begin with equipment OEMs, or a medical device manufacturer. These companies drive innovation in diagnostic and surgical equipment, imaging systems, robotics, and patient aids. So Europe excels in high quality manufacturing and R&D, with a noticeable shift of activities from Asia and US towards established hubs such as Ireland, Germany, and Denmark. Now, in terms of investment opportunities, RAST, that is robotic assisted surgery, and advanced implantables stand out as a very high growth area for 2026. OEMs are seeking precision equipment for applications like neurostimulation, pulse field ablation, cardiology, and oncology, and a wide range of minimal invasive procedures. So, you see a lot of them trying to gain interest with their present interest in robotics, healthcare, IT, and AI. Another strong opportunity that lies is in contract design and manufacturing organizations, or CDMOs as we call it, which serves as an OEM supplier. The European contract manufacturing is expanding rapidly from USD 15.2 billion. It's estimated to be at least around 33 billion by 2032. So OEMs are increasingly outsourcing production to concentrate on R&D and marketing, while CDMOs are providing scale, cost-effective manufacturing capacity, etc. So moving on to another important is the component, which covers the supply chain and precision parts. Europe's CDMO is particularly robust in component manufacturing. Now, key opportunities for these precision components are basically for next generation devices, like think miniaturization, ultrafine wires, sensors, and connectivity solutions that are required for robotics and implantables. So a lot of supply chain resilience and automation represent another major theme as well.
Okay. Any example of a recent deals kind of illustrating the activity in investment or M&A?
Yeah, very interestingly, if I can name one, because we are talking about robotics, one is the Intuitive Surgical's acquisition of a Southern European distributor. Now, the deal was approximately around 300 million euros upfront, and this was announced in Jan 2025. So what has happened is they have gained direct control of the Da Vinci surgical robots and the Ion robot for bronchoscopy in terms of distribution in Italy, Spain, Portugal, San Marino, and associate territories. So what helps them this to do is the systems enable minimal invasive surgery. So an aging population that's driving demand for complex surgeries with faster recovery and lower complication rates are becoming a demographic angle to their investment. So this move basically signals a very strong ROI in scaling robotic adoption across Europe's mature but high volume market. So creating an opportunity for further consolidation of tech upgrades in robotic platform as well. We have a kind of a similar one for another example, which is with SLR and the Lexotic uh, undiagnosed value or deal. But the technology theme was to have end-to-end with AI, end-to-end eye care with AI-powered diagnostics, wearables, etc. Now, the vision impairment explodes with aging population. So this acquisition actually extends the SLR Luxottica beyond lenses in the full MedTech service. It demonstrates scalability, clinical-based models for demographic-driven chronic cases, and even a strong potential for digital AI integration and cross-border European expansion.
Okay, well, really exciting. Thank you very much, Vijay. Cool. Well, let's move on from human robotics to mobility and connected vehicles. Hikmet, what have you got for us?
Yeah, thanks, Arno. And yeah, I mean, I will be talking about more on how actually we are evolving from but when I started my career, like we're talking about the concepts of the smart cities and evolution of these. So there were multiple aspects in the ecosystem. But now, today, actually, if you look into the next 15 years, we are talking about the concept of autonomous cities as well as the smart infrastructure, which is enabling to achieve an autonomous city concept. So maybe let us start with defining what is an autonomous city. I don't know if you are sharing the screen or no.
Yeah, I'm coming. It's
Yeah.
I'm coming.
No,
I'm
no, it's
changing
okay.
slide. Sorry.
That's fine.
Didn't go
So
as I expected. Yeah, here we go.
thank you.
And here
No,
we
it's
go.
okay. So what I was talking is mainly the evolution of the concept of autonomous city, which is an urban environment which is or which will be driven and powered by AI, IoT, and advanced digital infrastructure. So what we see is actually the key shift when we are talking about to the autonomous city concept from the smart city concept. The key shift is actually to be able to monitor, manage, and optimize the overall city operations real time. And also, autonomous is meaning, of course, the minimal human intervention. So, and actually, it has critical building blocks. So it's not only about one aspect of the mobility. And then when we talk about the cities, you need to talk about the safety concept. We need to involve energy into that. We need to talk about the infrastructure, but there are actually key building blocks of that. I will start talking about the digital infrastructure. So it's about basically through the connectivity, through sensors, through data platforms, data centers. Actually, it is establishing the foundation of the system. Without this digital infrastructure, none of the things that we will be mentioning about the autonomous city concept will not be achievable. And then, of course, on top of this, then you need capabilities through AI and predictive analysis, which will allow cities not just to react, but also anticipate and optimize the outcomes in the real time. That's another aspect. And of course, I'm coming from the more on the mobility industry and looking into that. And one of the actually most important, let's say, and the pain point of the citizens of a city is the generally the the mobility and the transportation. So we will are talking about cities with more vehicles with more autonomous functions, self-driving vehicles, robotaxis, which are becoming integral part of the public transportation systems. Again, public safety is quite important. So cities are already collecting a lot of data through, monitoring and through the cameras and the analysis of these through the AI. It will actually enhance cities to react and respond to the, any unfortunate events might be happening in the city. And finally, the energy is inevitable part of it. We are talking about smart utilities and energy management. Actually, in Europe, we are looking at a quite mature environment of this environment. So, but it will also allow cities to dynamically, to coordinate and operate to be a autonomous city. So at the end, what are we looking into? And impact is important for the citizens. So we are looking into a higher efficiency in the operations, stronger and resilient cities, and ultimately the goal is to have a better quality of life for all the citizens. Yeah. So we are actually essentially not digitizing the cities, but we are making them, to think, predict, and act their own. But now, if you move on to the next slide, I want to talk about because we are talking about an end goal. Autonomous city is an end goal actually, where the cities or where what visionaries they want to achieve. But currently we are at a pilot stage, and commercialization actually requires certain steps to happen. So we will not see an immediate commercialization or immediate full integration in day one. Again, it's a journey, 10 to 15 years of journey. And again, it's less about technology, and it's more about execution in this stage, because what we see today is technology is getting there. It is of course developing with the powered by AI, but it's more about at this stage getting it integrated and creating this autonomous city ecosystem. We see some examples in the mobility, the cities like Barcelona in Germany, There are tests of robotaxis in the autonomous vehicles in the real city environments. So these are happening. But what is required to be, let's say, to fully commercialize and let's say achieve the dream of autonomous city is about a clear monetization and funding structure is required. And we are talking today to the investors and investor community. So it's about who is paying it, who is getting the benefit, and then how are the returns are generated. We need the ecosystem coordination. So it's obvious and clear that there won't be a single player to deliver an autonomous city alone. So it requires collaboration across mobility, infrastructure, and energy system tech players. And finally, we need to shift from isolated pilots to the integrated citywide solution. So it's actually again the bottleneck today is not the innovation, but it's more about how to scale these opportunities and how to operationalize these solutions to achieve this a better quality life for the citizens. And then maybe let's talk about a bit in the next slide what it means for investors today, because again, we are looking from an investor perspective. So I see this as a opportunity for a system integration. So it's again not about standalone technologies. It's about how mobility, energy, and the data ecosystem will come together. And then we see the clear shift. So if you look into if you look into the future and where the actually investments are happening today, it is to make first of all infrastructure smart, to make infrastructure more intelligent and connected. That will allow all the other layers that will build on this smart infrastructure. And then we are talking about opportunities in Europe, and Europe is actually politically driven, policy driven investment hotspot. So there is a strong regulatory momentum around always in the concept of decarbonization, in the urban transformation. So it actually still receives a lot of significant public funds. So it will help actually, it will reduce the risk of the private investments in this space. And also, cities want to, there is also competition between the cities. So cities are becoming innovation hubs, and they are becoming and racing to be the early adopters of this to drive the the deployment of this solution. So again, and to finalize it here, there are three layers. One is the infrastructure. We talked about it. The second layer is the platforms. It offers high growth potential. We are talking about urban data platforms, digital twins, and also mobility as a service business models to evolve. And then finally, the integration opportunities. The question lies down into who will be the orchestrator of this autonomous city. So the players who can connect the mobility, energy, and the data together will be the places where the strategic value sits today. Yeah. So actually, that is what I wanted to explain. And then I don't know if there are any questions that I can receive.
Well, I'll start with one, and thank you very much for that, Hikmet. You're saying there are high growth opportunities, platform, AI, digital twin, etc. Is there any geographic limitation? Meaning, you talk about the importance of infrastructure as well. You touched up on regulation. You know, are regulation going to limit the market? Does it mean it's better to be within Europe or just on the outside, the EU, or just on the outside? Is it better to operate within like the old Europe, mature Europe, or within a younger country like Estonia, with better, maybe more digitally aware? Where is there a geographical impact as well and regulatory impact on this?
Actually, I mean, it's an interesting question. It's not, in my opinion, it's not about, where the innovation or where it can happen. And then because we see that, I mean, again, if you look at Europe, you see a different set of countries where you have the countries like Estonia, like you mentioned, they have, strong establishment, digital infrastructure is there, they're agile, they are relatively flexible in terms of adapting to solutions, but maybe they are, but in terms of the scale, they might not have this scale of to achieve higher volumes. So they're ideal for pilots, maybe test environment on early stage innovations, but actually where this investment and real funding and scaling will happen in the what we can call the old markets like Germany, France, United Kingdom, and but to again I will emphasize the point of the infrastructure. We need to upscale the infrastructure of these cities and all these countries which will allow to be, achieving this autonomous environment. So again, it will be driven by the politically as well. So the political environment will drive all of these, and there will be funds available. But yeah, I think it will happen, it will be maybe piloted in this more, flexible locations, and then it will be commercialized or, scaled up in the old, what we can call the old Europe.
Thanks, very, very clear, very exciting. Excellent. Maybe we can hear from Daniel. I mean, this is the consultant talking, but let's hear from the from the business. From the business, Daniel, what's your view? Do you want me to start the slideshow as well at the same time, or?
Yeah, maybe you can start up the slides same time, but everything is well said, Hikmet, and I fully recognize and concur what you're saying. With the autonomous cities, we have very widespread in terms of maturity level. There are kind of fundamental infrastructures already in place where, yes, it's good to drive the penetration of new technologies. On the other hand, if you want to make changes, it is harder to do. But let me allow to give a bit more color about the mobility, specifically here, the public mobility part. And when you think about the today's and future challenges, such as the limited space, road safety issues, inefficiency, pollution, this will intensify as the urbanization will continue to rise. And before post-COVID, we all believed traffic will go down, but no, we are back to the old normal, and this will further go up as the urbanization rate is increasing. The transport infrastructure alone cannot keep up with the growing demand and the regulations, which means investors, technology, service providers must adapt and respond. Mobility is evolving and transforming to new levels, and the public transportation will play a critical role here in achieving sustainability and safety targets, and serving as a central pillar of upgrading our living and workplaces. Hence, we can expect an ongoing public and private investment activities in that area. And so what I have prepared here is, one, to bring you into the basic pillars of the evolution of mobility, then looking into some market hypothesis and what does it mean on implications for the technology. From there, you can read out already what is trending up, what is trending down, and then maybe some few examples of current and future solutions. We can go to the next slide, please. So what you see here is some key pillars impacting the evolution of mobility. And let me start with the first one, the regulation readiness. Mobility operators and vehicle manufacturers must stay aligned with the new norms, from emission rules, cybersecurity, big topic, and safety standards like the global safety regulation. Being prepared early helps avoid costly adjustments, keeps mobility operators compliant. Clearly, from an investment point of view, there will be trade-offs to be done in every city, in every region. Safety remains a core priority, and the goal is to reduce the incidents, better protect pedestrians, passengers, drivers. But what is happening is also that the intermodal traffic is going up. And I'm sure everyone has here experienced a close to accident case. Think about the complexity by having more e-bikes, scooters. Actually, the rate of accidents is going up again. And advanced vehicle technology, smart infrastructure, proactive monitoring and alert systems will have to address zero accident goals. Number three is that we need to bring in the passenger-centric experience to improve it more and more, because the users expect accessibility, convenience, and efficiency as a standard. Improving the experience strengthens the public transport attractiveness, and that's exactly what we need to do in the autonomous cities to bring up the penetration of public transport. And the cities will continue to shift travelers away from cars, private cars. A more seamless, reliable journey directly increases the ridership. Then four is about to maximize the transport asset. Every transport unit availability is another major driver. Every minute of a bus or metro is down affects the service quality and the operating cost. The goal is to increase uptime, maximize asset utilization. Predictive maintenance, advanced diagnostics, and connected systems play here an instrumental role. Number five, efficiency is essential to keep operating costs under control. And the more public mobility will go in, the more it is important to get this under control. Automation and digital tools enable smarter operations and help lower the total cost of ownership over the lifetime. This will allow operators to do more with limited resources, an increasingly critical factor in service offering. Then 6, it's about new business and revenue streams. And Hekmet, you have mentioned it. It's about, that we can finance, or the cities can finance, a new level of mobility. And data-driven models open new opportunities beyond traditional ticket sales. This revenue stream support financial sustainability and long-term for operators and also technology providers. Now, once we have now covered the evolution pillars, and we can go to the next slide, I will just touch base a few market hypotheses and the implications of technology offering. One is missing resources. Public transport is increasingly challenged to meet daily mobility needs due to persistent and growing resource shortages. And what are the implications? The implications is there will be a strong market pull towards automated systems, ultimately moving closer to fully autonomous vehicles. This will take some years, and with that, supporting infrastructure. The goal is to reduce dependency on labor-intensive operations and build scalable service models that can grow even when the staff availability cannot. Number 2 is rising need of the automated safety solutions. Safety expectations are increasing, require more advanced intelligence, integrated vehicle safety systems. Cities and regulators are raising the bar on safety, both for passengers and vulnerable road users. Therefore, automated driver assist technologies will become essential for future mobility operators. The implication is that, yes, technology will make this happen. Advanced vehicle capability will be addressed in future more and more by also the software-defined architecture of vehicles. But on the other hand, the system complexity might also go up because the advanced system design and the integration gets more complex. So this is something where solution will be needed. 3, sustainability targets accelerating e-mobility. Countries and cities continue to deliver upon sustainability targets, driving rapid growth into zero-emission fleets. Public transport is a key lever in achieving citywide CO2 reduction goals. That's why public transport will be an investment area for the next decades across the regions, across all countries. The implication is that there is a shift required to deploy electric vehicles. But this is not simply by deploying electric vehicles, it will demand also a complete ecosystem transformation. On vehicles, there is a need on energy management to optimize charging schedules to keep the battery health up. Then there will be a significant upgrade needed in charging infrastructure, energy concepts and storages, including maintenance service concepts. Number 4, there's a strong need for the asset optimization. With the financial pressure and growing demand, operators must extract maximum usage for every asset as the value will go up. Just look into the prices of e-buses. High utilization is a strategic priority, and it's not only a cost-saving measure. Data-enabled decision-making will drive operational excellence. The implication is that the fleet management systems will advance, leverage real-time vehicle data for smarter planning and maintenance. Operations will shift towards dynamic demand response models, adapting service levels in real time. Number 5, increasing digital solutions capability on vehicles, partially AI-fueled, become fundamental for future mobility ecosystems. Why is that? Because vehicles will no longer move passengers from left to right. They will function increasingly as a mobile data supply. Therefore, transport units will serve as data hubs, enabling fleet and mobility-wide optimization. 6, integrated digital ecosystems. Here, we will have more and more a connection between the vehicle, the system, the infrastructure, and the operations into one wider ecosystem. Connectivity will become a standard for safer, efficient, and scalable mobility. Real-time data exchange will define the next generation of people transport. And so there we will see a lot of investments also in the wider adoption of V2X, Internet of Things, cloud-based mobility management platforms. This is a shift enabling real-time optimization, predictive maintenance, and proactive service planning. Now, coming more to the end here, to the next slide, where I like just to color a few solutions. I will not get too much into details because we'll spend hours and hours just to go through a catalog of solutions, potential solutions. But on safety, clearly sensors will play a leading role. And here we are providing, from ZF perspective, GSR-ready ADAS suite covering extended functions such as driver distraction warning, event data recorders. Safety is further elevated with these solutions by also being connected with predictive alert infrastructures, enabling vehicle anticipating risks and earlier and act more intelligently. Second, supporting the growth of electric buses and shuttles. The transition to electric vehicles is getting at full speed. Synchronized vehicle motion, driveline systems are of essence to improve performance, energy recuperation, consumption, and as an example here, thermal management is one of the development areas. At the same time, infrastructure must evolve. Depots, for example, will increasingly require upgrading charging solutions such as pantographs or energy storages. On 3 vehicles, infrastructure become continuously jointly intelligent. What I mean by that is that we will see vehicle data feeding mobility platforms on all topics from safety, efficiency, but also road conditioning, and even identifying false parking, which with richer data, operators can select the right vehicle type, adjust the routing, route allocation, and shift to more demand-responsive operations. Both vehicles and infrastructure will evolve into connected, a learning, predictive system. Finally, improving convenience and flow of passenger will be of high importance. Operators will rely on technologies like the bus stop assist, passenger counting, automated tailored ticketing systems. The solution will help people to move more efficiently, reduce dwell times, and make public transport more accessible and convenient. So here I'd like to close on the last slide that we want all to advance mobility because it's a cornerstone for increasing quality of life in the regions and the cities. Achieving the state of the art requires also here every stakeholder across authorities, infrastructure, technology, service provider, and investors to enable mobility to really deliver. And it really ties up to what has been said before. So there's a lot of things coming in. It will increase in volume, market value, but also in general solutions, specific solutions will then further be developed to bring up public mobility to the next level and to contribute to autonomous cities.
Well, thank you, Daniel. That was really interesting. That was fascinating. Yeah, a question maybe for you, and it was very useful to see your 6 ways to look at things, and it looks like it's a checklist to identify the real potential of any company moving into the space or growing into the space. My question is, based on everything what you say, I'm a CVC. I want to diversify in that space. Where should I go into? Where is the best entry point, maybe for profit or for availability of growing players? Is it more of the vehicle? Is it the data management, the infrastructure, or the sensor? Yeah, all the kind of sensor that need probably to be provided for the security aspects of it.
Yeah, I would say it's growing everywhere. So if you see this in 3 levels, the vehicle level, so there's a lot of technology going in to smarten up the vehicle. So we talk about really the software-defined vehicle and all the new architectures that need to be developed. So the future will be that the car will and the vehicle itself will be part and parcel of the whole ecosystem. Like I said, it is going to be a mobility data provider. So there will be a lot of investments and developments happening on data processing, data collection, edge computing, connecting it to clouds. So that is a big thing. That will also touch all the fleet management systems, depot management systems, platforms. So a lot of investments will go up in there. So in terms of CAGR, so growth, acceleration, this is where a lot will go in. But on the other hand, also a lot of standardization will kick in, because right now you see from a digital solution point of view, platforms, a very fragmented landscape. So there will be a consolidation kicking in. So nevertheless, but here, many steps are in front of us to bring the right upgrades in the mobility ecosystems.
Okay, thank you. Thank you. Very, very clear. Well, that was great. Thank you very much, Daniel. That was very exciting, and I'm sure there's plenty more questions, but because of time, we need to move on. So we've been talking about the workers. We talked about the cities now. In the middle, we have the workplace. Let's talk about facilities management. John, tell us more about it.
No, thanks, Arno, and just thanks everyone else. By the way, I've loved hearing the first presentations, because one thing I thought that you people could have been forgiven for thinking at the beginning of this session was that they were going to be hearing from 4 or 5 different sort of randomly separate topics, but actually there's more common themes than perhaps we realized. And one thing that I'm excited about talking about is facility management, and in many ways FM, as we call it, is part of the glue that kind of runs between everything and brings it together in terms of convergence. Because hearing I was writing down a few notes as the guys were talking, and hearing Bijoy talking about healthcare and the increasing criticality of the patient journey, enhancing efficiency, delivering value for hospitals, supporting the digital transformation, etc. These are all high agenda items for any facility management company supporting the healthcare sector. And by the way, healthcare is one of the biggest, fastest growing customer sectors for facility management. Hearing Hikmet talking about smart and autonomous cities, safety, energy, infrastructure, converging, etc. The convergence of facilities with the smart and autonomous city environment is also high on the agenda of any facility management executives. And then hearing Daniel talking widely about mobility transformation, but particularly things like electrification, fleet management, supporting public transport, again, critical themes that are emerging for successful facility management companies working in the city environment close to mobility. So it helps me get onto the topic of why facility management is interesting. And I know your title for the session, Arno, is high growth areas. The truth is, facility management is not really a high growth area, but it is an absolutely enormous sector with extremely highly attractive investment opportunities, perhaps for slightly different reasons. And that's what I'll just spend a few minutes talking about, and then maybe we can have a bit of discussion. There's quite a lot on this slide, and don't worry, I'm not going to try and go through it all, but we do a lot of work in facility management. So I just thought I'd dwell a little bit on some of the things that we see happening in 2026, but really pulling it all together, what does it mean and why is it attractive? Well, in the world of facility management, we see, solid growth, I would say. High growth is an exaggeration, but solid underlying growth, a market or an industry that's ripe for consolidation, that's going through technology disruption, that is underpinned by critical attention to sustainability, drivers, decarbonisation, etc. A market that by its very nature is focused on resilient business models and repeatable and renewable revenue streams. Now, if you're a private equity investor, for example, most of those are your tick boxes when you're looking at a market, right? Is it ripe for consolidation? Is it ripe for disruption from technology? Are there opportunities to pull things together? Does it have those kind of technology and sustainability plays running through them, as well as one of the themes that you introduced at the very beginning of the conversation, Arno, everything to do with the disruption and transformation of the workplace and the workforce, because at the end of the day, most facilities are in some way a workplace for somebody. And actually, that's very much what facility management is all about. So that's what you can see on here as kind of some of the key themes that we see coming together. Now, of course, when you're talking about a very large sector, a very large industry that maybe at a total level is relatively mature, the exciting thing about FM is when you start scratching the surface and diving into different segmentations, different customer sectors, different service types, different delivery models, different geographies, etc. And that's where we see one of the strongest trends at the moment is kind of front and center on this slide when we talk about what we call customer alignment will win. This may be a sort of a stating the obvious in a number of sectors, but actually, FM is everywhere. It's one of the things that makes it fascinating to me as an analyst. FM is everywhere, every service, every sector, every region, wherever you are. And actually, there's increasing pressure from customers for service providers to be fully aligned with the needs of individual sectors. And that's why I wanted to make that point at the beginning about things like mobility, things like cities, things like healthcare, increasingly driving success in this area. We'll keep going quickly because I know we're up against it a little bit. But just on the next slide, I know not everybody in the audience is probably familiar with what facility management is all about. So a few things you might not know. We're talking about Europe today. The Europe in Europe, we spend $750 billion a year on facility management services. That's 2.5% of total GDP. There's not very many industries that you can say that about, that you talk about 2.5% of GDP is spent in a particular industry. And facility management is like that. 36% of FM services are delivered through outsourcing. That's kind of the competitive market where really we see the investment opportunities that we're talking about today, which in itself is over $250 billion opportunity. There's well over 1,500 FM companies operating in Europe at the $10 million plus. And obviously at the top end of that, you've got many sort of multi-billion-dollar companies. And actually, it's also an industry with a very large tail where there's a significant number of smaller players, even if you go below, beneath that. And it is incredibly active for investment, for M&A deals through and investments from both within the trade and from financial investors, where we would track over 300 M&A deals or investment deals per year. And that's what we call at a significant scale. If you start actually looking at some of the smaller deals, some of the diversifications away from FM, from some of the larger companies, you actually very quickly get up into the thousands. Okay. And, I said it's ripe for consolidation. It absolutely is. It's still a fairly fragmented market. Even at the very top end, where there are some very large players, there's still only around 17% of the total market controlled by the top 10 players. So there is no reason to wonder why there's an awful lot of investment activity in this exciting area going on at the moment. We expect it to continue in the next few years. And what's interesting is it also goes on to shape the sector itself. So, external, obviously M&A activity shapes the structure of competition, the structure of the ecosystem within the market, but external investment also shapes the strategies of companies. Particularly, private equity money has been pouring into FM for many years now, but with an acceleration in recent years, including a lot of PE acquisitions of significant size players in the market. And what does that do for the industry? Well, it changes the dynamics of individual companies. When you have private equity backing for large companies, they typically have much more aggressive growth objectives. There's a great example here in the UK where I sit. One of the leading companies, an organization called OCS, was acquired by a private equity firm called CD&R back in 2022, with a stated goal of doubling the business in 5 years. Now, if you've got a CAGR for the market of 3 or 4%, doubling the business in 5 years is pretty ambitious. That's going to involve a lot of investment. It's going to involve an M&A journey in its own right. But it's also going to involve different attitudes to growth from the organization within the market, different attitudes to risk, different attitudes to customer sectors they want to go after, to services they want to build. And so that's just one example. But it's a fascinating evolution of the sector. just one more slide very quickly, Anna, and I'm not really going to talk all that much through it because there's a lot on the slide, but it's just a little example. This is the UK, just as an example. I sit in the UK, so why not use the UK as an example?
Go for it.
There's a bit of a text on the top of the slide just to give you a feeling that there's been a heck of a lot happening in the last decade in the market. But just draw your attention to the chart at the bottom, and I think it's a little bit interesting. It's not a beautiful chart, but this is plotting FM market growth against GDP growth in the UK over a 10-year period. This is a market that has been incredibly resilient over the last decade, facing all kinds of geopolitical, social, and market challenges, yet it's continuously outstripped GDP growth in terms of market growth, even though it's a very, very large, mature sector. And another thing that I think is very interesting is that actually the COVID pandemic, which triggered that massive wiggle in the middle of the chart, has actually led to higher levels of growth post-pandemic than we were seeing in the FM markets before the pandemic. Now, FM is, that you wouldn't expect to be the case in most mature, large mature industries like this. But actually, as we all know, the COVID pandemic completely changed our relationship with our workplaces, with the built environment, and so on. And that focus, the strengthening of use cases for technology, the enhanced focus on sustainability and workplace and so on, have actually, in spite of the pain that companies went through for a couple of years in the middle of that chart, have actually led to a more resilient, higher growth sector as a result of that. So there you go.
Great, thank you, John. So, John, one question. So that must be from someone who knows a bit the topic. So, where is the opportunity now in the context of today? And short answer, short question: is it more in what vertical? You mentioned there is a diversity of vertical. I guess more like data center at one end, and maybe healthcare at the other, and more people or more technology. And maybe some of it is more. Yeah, maybe comment on this one. Yeah, is there an area that is growing more today?
Yeah, you partly answered the question while you were asking it. Oh no, I mean, but it's
healthcare or data center or both.
Well, they're both. I mean, look, we look at many customer sectors. If you're talking about a market that big, you've got to segment it quite thoroughly into lots of different customer sectors. There are some areas that are very mature. If you look at sort of professional and financial services markets, which are tough to grow in because they're so mature, but there's some extremely dynamic markets. Healthcare is one example. Data centers is another, as you mentioned, although data centers, I would argue, is a building type rather than a customer sector, but that's a subtlety of the conversation. It's still a growth area. But there's some other interesting ones, things like haulage and logistics. The way we transport goods around, the kind of the growth in online retailing and parcel delivery and so on is leading to really strong growth in the logistics and haulage sector,
of course,
for example, and many others that if we had time to discuss, we could. But
well, that will be for another time. Then
there's at least a few examples.
Thanks,
Yeah.
That will be for next time. We'll discuss this one next time. Actually, yes. Thank you. Thanks everyone. Time is nearly up, so I think it's time to wrap up. It was very insightful. Thank you everyone. If there is any question from the audience, please send them through the standard way. That was the first series of a session. We'll be back with other webinars to talk about more growth opportunities in Europe. So stay connected. Thank you very much, and have a good day.